Thank you for joining me. I'm Alex, and I want to talk about Best Buy today. So, obviously, they shouldn't really be that affected by the current situation. Most states didn't actually close all non essential businesses. So, they didn't actually close stores everywhere. Obviously, there were a few states where they had to, but overall, I would say that they were not as affected as many other places during the current situation. Now, the unfortunate thing is obviously the height of this thing was when the stimulus payments were made. And people tend to buy electronics with like tax returns, which fell into kind of the same time. So there's definitely an impact here, but they should be fine, I assume. So, what they do is electronics retail, also appliances and things like that. They also repair stuff and provide support for a lot of stuff, and they have a bunch of services as well, but mostly retail, mostly electronics. Current price is $80.73, which gives them market cap of $21 billion. Current dividend yield 2.86% with a 38% payout ratio, which is not terrible, but also not that great. Revenue $43.6 billion, slightly up. Earnings $1.5 billion, also slightly up. So earnings this year or last year are rounded down. Earnings previous year are rounded up. So there's a difference. It's just not that significant. Current PE is 14 with a forward PE of 13, so they were expecting to have more earnings in the current year, but obviously I wouldn't really expect that. Total assets $15.6 billion, total liabilities $12.1 billion, which gives them market cap of $3.5 billion. And I have to say that I'm kind of disappointed here that they did stock buybacks for $1 billion when the balance sheet only has $3 billion on it. I think that is very short-sighted and very dangerous. Obviously, no one saw the current situation coming a year ago, so that I don't fault them for that, but I think that $3 billion is not that much of a cushion when the revenue is $43 billion. So I don't like the stock buybacks, especially that significant, especially at this time. With that said, balance sheet doesn't look too terrible. It's still bad. I don't like assets to liabilities ratio of 1.25-ish. So not really liking the stock buybacks, especially for that reason. The PE is pretty nice. The dividend yield is pretty decent. The payout ratio is pretty nice though, and the growth basically not there. So overall, obviously for a growth investor, there's not enough growth here. For a dividend investor, this looks pretty interesting, especially you can get better deals in the current market, but overall I think that Best Buy is one of the retailers that definitely has proven that they can stick around. And as you can see, even their revenue is still growing even with all the competition entering the market. So seems like a reasonable, safe business. As I said, I don't like the stock buybacks in the quantity that it is. I would have liked them to pad their balance sheet a little more, but overall I would say that this looks very interesting for a dividend investor, and if you can look past the balance sheet, I think it looks pretty interesting for a value investor as well. There is growth. There is a decent dividend. The payout ratio is pretty nice. The balance sheet looks okay. It does not look good. But I think it's pretty interesting for a value and a dividend investor. That's for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.